So Rivian's deliveries remained flat in Q1 as EV maker prepares for plant shutdown. The other thing that has shut down has been volatility as well, as price has been range bound for the last couple of weeks within a $3-4 range. Now, the volatility did kick in months ago as price broke through a key level at $15 and in the process formed weekly sellers at the $16 level, and one can see that a bit closer on the weekly chart as you had a drop in price again. Here was that key level. This is support, resistance, support again at $15, but this leg down, rightfully so, price based as it was at support until the sellers eventually took over and you had this next leg down. So you had a drop in price, basing, and then a drop. So this is a drop, base, drop. And I have a $5 target. Now, whether it gets there or not is another thing, but as long as Tesla continues to go down, Rivian's going to go down as well. And so with that said, let's look at the article. Is coming from Electric. So EV maker Rivian's Q1 EV deliveries were about flat from the fourth quarter as preparation began at its Illinois plant to cut costs. Despite deliveries falling slightly from Q4, Rivian beat Wall Street expectations and confirmed full-year production guidance. Now, Rivian announced first quarter 2024 production and delivery numbers Tuesday, again as they prepare to cut costs at its manufacturing plant. The company produced roughly 14,000 EVs, down from 17,000 in Q4. Rivian delivered 13,500 vehicles during the quarter, down slightly from the roughly 14,000 over last quarter. Although production fell quarter over quarter, Rivian still beat Wall Street expectations by about around 13,800, and it was prior guidance of 13,500. So now, one thing to note is Rivian continues to lose money on its cars. I mean, just look at this table here. Now, yes, they have gotten the costs down, but this is an economy of scales game, and so they have not broken even yet, and potentially they will do as they produce more cars and as interest rates come down, the cost of capital comes down. As a result, the company announced it was cutting 10% of its workforce in February. The CEO said it was a move to maximize the brand's ability to make an impact and expand. All right, one thing to note, they ended the quarter with roughly $9 billion in cash and equivalents. The company revealed its smaller, more affordable R2 last month, which will start around $45,000. All right, to accelerate the launch, Rivian is pushing back construction at its $5 billion facility in Georgia to launch production in Normal. So this is how they're going about cutting costs, focusing on the operations at one plant versus starting up another plant. All right, so again, you can see on the weekly chart we had a false breakout to the upside. Again, if you look at the moving averages, this tells me that price wants to go down, right? Even if price moves higher, you're going to have to contend with these weekly sellers at $16. So the bottom is not in. Don't attempt to catch that falling knife. Just be patient. You'll get an opportunity to go long in the future. Thanks for watching. Like the video and please subscribe.